We're taking a look at 5 of the most actively traded penny stocks on MarketBeat.com that offer traders, both bullish and bearish, ample opportunities. Let's dive in. All right, guys, today we are talking about some speculative plays that are known for grabbing the market's attention, and they offer incredible potential for those that are daring enough to dive in. So with volatility as their trademark, even minor price shifts can yield substantial gains or losses for traders. So let's get into it. We're going to dive into the top 5 most actively traded penny stocks that we saw in MarketBeat towards the end of 2023. We are covering Bitfarms, TeraWulf, Tilray, Fisker, and Canoo. So let's start with the Bitcoin chatter here. Bitfarms and TeraWulf are 2 on this list. So what factors have contributed to them being on this list, particularly in relation to the surge in Bitcoin prices?
Well, ultimately, this is all about the surge in Bitcoin prices. You can see it right in the charts. The stocks enter a solid uptrend when Bitcoin prices start to rise. Bitcoin prices started to rise because of the potential for an SEC-approved ETF. When that happens, Bitcoin goes 100% mainstream in a way that retail investors will be able to get a piece on a regulated U.S. equity exchange. Ultimately, what we're talking about is a cash flow lever akin to gold. When gold prices go up, it widens the margins for gold miners, and the same thing is happening for the Bitcoin miners.
Yeah, I like the fact that you brought up gold, because it seems like today, especially I see it on social media and such, you can't have a conversation about Bitcoin without there being a conversation about gold. And personally, I don't understand it, because I kind of look at it as why are we arguing about either or? You could own both. But
You're right.
but I think the conversation as it relates to these 2 stocks is interesting, because there is that correlation, like you noticed, as the price of Bitcoin goes up, the Bitcoin miner stocks look more attractive. But I've been noticing that the correlation between Bitcoin miners and Bitcoin is a little closer than it is of gold mining stocks to gold. So that, I don't know if that makes it more attractive to just say own Bitcoin as opposed to owning the mining stocks. Whereas with gold, it seems like it's a no-brainer to say you'd probably own the mining stocks over owning the physical gold.
Yeah, that's a tough call.
Yeah.
All right, well, let's talk a little bit about how these 2 kind of differ. So in terms of market capitalization, pricing, and stability, what are the differences here? And what impact do these differences have on their potential for growth?
Well, Bitfarms is the larger of the 2 by far. It's got more than double the expected revenue in 2023 and 2024. It also has more leverage, so it can invest more heavily in growth. That's why it trades at a higher valuation. The market cap is roughly double as well, depending on the day and time that you look. As far as growth and stability goes, Bitfarms is the more stable, but both are small caps with established businesses. The question here really is about profitability, and both are expected to turn a profit by the end of next year.
Is there anything that we should note here about the observed price action of these 2, or specific percentage gains or scenarios that traders might need to consider?
Well, the price action has been hot since the Bitcoin rally started. Bitfarms especially is hot, with it breaking out of a range and entering what could be a new rally. There are some bullish factors in play for Bitcoin, including the halving in April. That's when the available supply, or the amount that's paid to miners, is reduced by half. This stock could double again after that. TeraWulf is lagging right now. It's not viewed quite as well by the market, but it's still in a solid position to follow Bitfarm higher. Its last reported short interest was about 25%, which provides ample fuel for a short covering rally should some solid news or another catalyst emerge. I think this stock could double or triple or even quadruple in prices over the next couple of quarters in that scenario.
Great insights on that one. Let's move along to Tilray. It is the 3rd most active penny stock, but for differing reasons, right? Recent volume has picked up, but Thomas, you're saying that this shouldn't be taken as a bullish sign. So why is that?
Well, I see this stock in a sustained downtrend. The recent uptick in the price action is weak and aligns with the bearish outlook. It's really just a natural upswing in the market following the last sell-off. Ultimately, the cannabis market sucks. People aren't making money. The glow is over. All the people that wanted to try cannabis in the old days have done it. They didn't get hooked. So there's not really a growth trajectory, even with federal legalization. I just don't see the market really going anywhere I mean, ever right now. I mean, there's not really a positive catalyst in view that I can think of.
Chris, let's pull you back in here.
Yeah,
What are your
sure.
thoughts on this one?
Cannabis stocks have been sort of a no-go for me since the bubble burst back in 2019, 2018. Um, Thomas was making the point very well. The problem with the industry right now is no matter how many states approve legislation to legalize cannabis, there's a supply demand issue here that's just not going to go away anytime soon. Plus there's the whole issue of how are we going to do this where different states have their own different regulations for how cannabis is legalized. So it's just kind of a mess right now.
Mhm.
And I agree with Thomas. I just don't see I don't see a lot of these stocks being in good position to become profitable anytime soon. If I were going to be investing in the cannabis side of things, one area that might intrigue me is as cannabis relates to beverage companies. That might be where the growth comes.
Yeah,
That's true. Yeah.
I think my pick, if I were to be forced to pick a cannabis company to invest in, would be Innovative Industrial Properties. It's a REIT. They're triple net REIT. They're buying cannabis properties. So it's like cannabis companies might not be able to make money, but they got to rent their properties. IIPR is making money and paying a dividend.
Yeah.
Leave it to Thomas to always pull in some other investments that we're not focusing on in the video.
I'm sorry. I'm sorry.
Can you, Thomas, though, elaborate on any technical risks that might be associated with their current position in the market?
Right. So the way I see it, Tilray broke through critical support at a historic low last year and has experienced volatility since. So right now the market is normalizing in alignment with the downtrend. The upswing is still well below the prior low, which is now our critical resistance point. The market may pop if the Q2 results are better than expected, but it will take a seriously good catalyst for it to enter an uptrend. That could be federal legalization, that could be profitability, but I don't see either of those things happening within the next 3 to 5 years.
Okay, so then there's the EV OEMs, Fisker and Canoo, that penny traders are betting big on. The volume for these two picked up over the last month or so of the year, and despite them hitting all-time lows. So what are the primary factors driving these downtrends, and why exactly would traders still be placing substantial bets?
Well, I'll jump in here first and just say, very interesting production and delivery report from Rivian earlier this week, and that could kind of be the canary in the coal mine as it relates to a lot of these EV startups. And what I mean by that is the Rivian report shows very clearly that producing cars is one thing, delivering them is another. And right now, Rivian stock dropped significantly this week because analysts saw that the company's producing cars, that's good, but they're not delivering cars at the rate that they thought they were going to, and that doesn't look like it's going to change anytime soon. What that means for Rivian is, in order to move that inventory, they're probably going to have to drop the price, and that means that delays the time that Rivian will get to profitability. And Rivian is a stock that has a larger market cap than either of the stocks that Thomas was writing about in his article. It's kind of a race against time here. It's not their fault. That's just the nature of this business, but some are going to make it and some are not.
Yeah, well, to answer your question, Lacey, the reason that you might want to get interested is because these beaten down names are surviving and they're turning corners. Canoo and Fisker specifically, at the current price levels, the market is pricing in failure, and we're far from failure. I mean, it's still definitely a risk, but we're far from failing in both these cases.
Talk to us a little bit more about Canoo here. Can you kind of elaborate on a little bit on their recent developments for the company?
All right. So last fall, Canoo entered its revenue generating phase. That's excellent news. It's still going to post losses, but this means that cash flow will be able to sustain operations for longer with less help. Other recent developments include the onset of production and the first sales, along with at least one significant order for over 500 vehicles. Now, 500 vehicles isn't a lot, but it's a big score because of who bought it. We're talking about LA-based Prime Time Shuttle, which is an airport shuttle service in Los Angeles. And just imagine the amount of traffic that they're going to see and the people that are going to go through those vans and those trucks and the amount of advertising for the company. I think that's a big deal.
All right, so looking on the other side of it then, in contrast here, so how is Fisker addressing challenges, specifically enhancing delivery capabilities?
Well, so like Chris said, making cars is one thing, but delivering them is something else. Fisker's issue last fall was getting vehicles to paying customers. It had orders, it had the sales, but it had a hard time getting the deliveries. So now it's ramping production and working to make deliveries more efficient. The December delivery report was fantastic, up 300% from the prior quarter, which points to a solid year in 2024. The stock jumped on the news. Volatility is still high, but I think earnings are due out soon, and that should provide a pretty solid catalyst. I think that they're going to surprise to the upside.
All right, guys, to tie it all together here, what are the key takeaways for investors interested in these most actively traded penny stocks?
Well, I think if nothing else, penny stocks are good entertainment. Some of them may turn into viable businesses and may become great investments, but for now, these stocks are for traders. Of these, I think Tilray has the greatest risk. It may not reverse course significantly, even with federal legalization.
You know, with penny stocks, I think one of the greatest risks is confusing price with value. As we've said before a lot on this channel, you know, there's a time when stocks are cheap for a reason, and that really applies in the case of penny stocks. But I get it. There's an allure of saying you can take $50 or $100 or $500 and you can really buy a lot of shares of penny stocks that you can't, and that for investors who believe that share price or excuse me, number of shares trumps everything else, that's a seductive thing. The problem is that right now you've got high-speed trading coming in here, and it makes getting in and out of these stocks in a quick manner, it makes it really difficult. So unless you're an investor that's got a really long-term focus and the patience to ride it out, investing in penny stocks is challenging right now. Of the ones on this list, you know, I'd probably think about Fisker or Canoo. As much as I said things that might have sounded harsh about the EV industry, it's not going away. It's just like I said, some of these companies aren't going to make it through to the finish line. I'm not sure if Fisker and Canoo are going to make it. You know, but we'll see. And that's the whole point of investing.
All right, well, penny stocks are tracked with potential, but caution is key. They demand patience, long-term perspective, and a tolerance for high volatility. So we are going to be keeping an eye on these stocks right here at MarketBeat, and we're going to continue to provide you with resources so that you can follow along as well. Thank you to everyone who joined us in this video. We'll talk soon.